Star Daily with Phil C.
The charts. Okay, we've just come back from a long weekend, an Easter weekend, and I trust that everyone had a wonderful time no matter where you are in the world. I had a wonderful time with me and with family, and if you were also blessed as well, I trust that you had a wonderful time with you and your family. However, the weekend finished, we have to come back in, and we have to load up the charts, and we have to start trading yet again. The thing that I want to start off with, so what we're looking at right now is the pound yen 1 hour time frame. So right here we had a Fibonacci swing high to swing low. Right here we had a bat pattern. We came into the 382 and I think we're at the 786. So 382 B point, 786 C point. Price action came all the way up into our sell limit order here at the 886. Now I got involved in this trade at this level. I got involved in this trade at this level. Now, this was actually a winning trade, but it was actually also a losing trade for me. The reason being, and I share these things because this is what's going to happen when you are trading. So it's important that I share this. So I got involved at this level at the 886. Price action pushes up, okay? We push up a little bit further and then we come all the way back down, as you can see. And then suddenly we get a move right up towards the upside, retesting these highs. And then we get a push further and then we hit the 113. At the 113, this is where my stop loss is. So when I trade patterns, my stop loss is above the X point. Now, as price action comes up and hits the 113, it stopped me out. Therefore, I had a losing trade. It was only a losing trade because I wasn't able to be in front of my computer to roll my fibs. And this is why it's so important. I bang on about this all the time, and this is why it's crucial. As price action pushes up, we need to roll our fibs because we need to keep measuring. Yes? And this is why. So price action pushes up, and then we come all the way back down, and look at where my 382 is. Okay? So does price action, as it comes down, does it come anywhere close to the 382? And the answer is no, because we haven't rolled our fibs. So the 382 is nowhere near. Price action is nowhere near the 382 because we didn't roll our fibs. Okay, now look at this. Therefore, I wasn't able to adjust my targets, is what I'm saying. Now look at this. If we roll our fibs, okay, to the swing high here, look at what happens to price action. As we come down, we hit the 382, don't we? And then we retest the highs and continue higher. So if I was here in front of the charts, if I was here in front of the charts and I was able to roll my fibs, we would have had a winning trade. So target 1 is hit here, okay? So not a big winner, but we would have got about 38 pips. Now let's say 35 pips. Would have had about 35 pips on this trade, and then roll our stops to break even. And as price action pushes up to retest the highs here, would have been stopped out for break even on target 2. So this would have been a winning trade if only I was here doing active trade management. If only I was able to be here doing active trade management, would this trade be a winner? So I just wanted to point out to you why I continue to say it and why it's so crucial to roll your fibs. Because that way you're actually measuring price action. That is what I say. You roll your fibs, you're actively measuring price action. So it comes down and hits the 382 and then immediately skyrockets towards the upside. However, I was not able to, so I got stopped out for so I shoot for double target, so I had 2 orders on. So I get stopped out for double, you know. So a winning trade stops us out for, over 50 pips. And that does happen. I just wanted to show you the reality of trading. Yeah, so that's really important to be aware of and to know and to also see. The updates that I have, so this is not a long video. I just wanted to show you that and also update you on what's happening here. It's a trend trade, currently short. So Aussie yen. Aussie yen here, yeah, I've already adjusted my targets here. So this is this is another example of what we need to do. Yes? So another example here. We get in at the 886 because we had a bat pattern trade here. Aussie yen 1 hour time frame, we have a valid bat pattern trade. As price action pushes up here, we see this spike. Yes? We get involved at the 886 right here because we front run our orders. Okay, so I front run my orders about 5 pips here. And then I get involved. Price action continues to push towards the upside, as you can see here. So what do we need to do here? We take our Fibonacci retracement tool and then we roll. Okay, roll towards the upside. We want to get up here where price action pushed up to. That is where we want to roll our fibs to. Yes? Because look, if we do it again, we take it off. Fibonacci retracement, swing low from this low here all the way to swing high, which means the wick of the candle. That's where we want it. So Fibonacci retracement, swing low from this wick right here all the way to swing high. Okay. So we want 382 and 618, but we don't want our entries right at these levels. We want to front run like this. So I want my target right before the 382 for target 1 and target 2 right before the 618, because as you can see over time, and your testing will show this too, the market doesn't turn on a dime all the time. Sometimes it hits a 382 flush right here. We see that. Sometimes it hits the 618. We see that. But most of the time it does what? It comes all the way down just shy of the 382 and then immediately turns. And you'll see this in your testing, and you'll see this over time when you're actively trading live. Okay? That does happen. So that way, doing targets like this, I back tested it this way because the market is imperfect and you see it all the time. So you test it that way, you find out that you have a positive expectancy doing taking profits at these levels by front running, and that is what we continue to do when we trade every single day, right? When we trade live. So that's what we're doing with this one. Again, this was Aussie yen 1 hour time frame. We have a bat pattern currently up 20 pips. We might get a move down a little bit further. That would, yeah. So 12 more pips for target 1. That would give us about 33 pips. And if we make it all the way down, we'll be about 67, let's say. 67 pips on the balance to add to the balance of that position. All right. That's what's going on with this one. And then, yeah, so this one here, This one here is the same deal. This is the Kiwi dollar 1 hour time frame. I took this swing low, right? So this is my impulse leg. Swing low to swing high, we get a Fibonacci retracement. Swing low to swing high. We come all the way into 382 is the minimum. Yes. We come all the way into a 50%. And then we get another move up. Okay. So B point is at a 50%. Another fib, swing high to swing low. And then for our C point, we have a 50% as well. Okay. Price action came all the way down into the 886. I caught this late, right? I've done plenty of videos on this before. We caught this late. So this is my sell zone. Anywhere within this box, remember? Sorry, sell zone. It's a buy zone. Anywhere within this box, you can buy, right? This is an active buy because we come down and hit the 886 and this completes the bat pattern. So all the criteria, all the 3 criteria has been met. Whew, goodness me. The 3 criteria has been met, right? So we have a valid bat pattern trade. Price action comes into the 886, right? So we catch it late right here. Let's do this. We catch it late right there. Why is this still valid? We come into the 886. So if we had our Fibonacci's and we roll it all the way down, you can see that price action came up and we're not anywhere near the 382. Okay. So this means it's still a valid trade. All right. So we're not anywhere near the 382. So as we come up and then we come all the way back down right here, that means I want to buy because we haven't hit our target yet and we're in our buy zone right here. So this is still an active trade. Okay. Didn't want all these moves to confuse you if we've already hit target or not. So I get involved and then we get another press down. So that means our fibs have to be adjusted again. So we move our fibs all the way down like this. And then we have a 382 right here and a 618 right here. So we're looking for price action to move up into 382 for target 1 and 618 for target 2. So again, as price action came into the 886, where is my fibs here? Like this. So we can see the 886. Okay. As price action came into the 886 right here, price action presses down a little bit further. So we roll fibs like this. Price action comes all the way up. We're not near the 382. Price action comes all the way back down, 886. Catch it late. So I'm in the buy zone here. We buy here and now trying to get a move towards the upside into these targets, right? So it's not too confusing. Right, yeah, so this is Kiwi dollar, 1 hour time frame, bat pattern trade, currently long. Aussie yen, bat pattern trade, currently short. Trending towards the downside, right there. And yeah, we had a massive winning trade here as well. So on the on the dollar yen 1 hour time frame, we had a bat pattern. We completely knocked this one out of the park. This was a really good trade. Hit double targets. Got involved here at this level. Okay, we came up and hit targets at the 382, and then we came up and hit target 2 at the 618. Right, so that was a really big trade. about 155 pips on that trade. And then, as you can see, continued to move, press towards the upside. We have a higher close looking left. So we're looking at price action to come all the way back down into previous structure right here. And then we'll see if we can get a continuation towards the upside, or if we fall short of it, and then we might get a move back down, giving us another pattern opportunity. We will see from what happens when price action comes down, if price action comes all the way back down into this structure, because we might stall at this structure. Looking left too. So we got right here, got right here. So see what happens with price action. All we need to do is follow it, and we keep identifying what's happening. And once it hits our criteria for our trading strategy, once it hits our rules of engagement, then we get involved. Until then, we do nothing. This is it. We just keep an eye on price action. We keep following it. We keep reading the language in the markets. Yes. And then when it sets up a trade, we buy or sell, depending on what it is that price action told us to trade. Because remember, the market's price action is telling us what to trade. All right. That's it. Until I said it was going to be short video, but it looks like, it's an average of 15 minutes, let's say. But yeah, these are the updates of what's going on for Tuesday. I will be back tomorrow. If you haven't done so already, please join the Start Classroom in the link below and start learning price action, the language of the markets, reading the ebbs and flows, and have fun with it. Until tomorrow, be safe, enjoy life, and I'll talk to you soon. Thank you so much.